What if I told you that the most exciting, talked-about investment of 2024 might have actually made you less money than the most boring one? That all the time spent researching individual stocks, reading earnings reports, and watching the market could have been for nothing? In 2024, we saw AI stocks go parabolic, market crashes and recoveries, and endless financial news. So which strategy truly won for the average investor? Picking hot stocks or simply buying the entire market with an index fund? We crunched the numbers, and the results will surprise you. Stick around to find out which path is right for you. Welcome back to Asset Bloom. We cut through the financial noise to give you data-driven advice you can actually use to build lasting wealth. The debate between investing in individual stocks versus index funds is one of the oldest in finance. It's the classic active versus passive investing battle. Today, we're not dealing in theories. We're looking at the real-world performance from the first half of 2024 to see which approach delivered better returns for most people. Let's break this down. First, let's define our contenders. Contender 1. The index fund, the silent winner. An index fund, like one that tracks the S&P 500, is a basket that holds tiny pieces of the 500 largest companies in the U.S. You're not betting on one horse, you're betting on the entire race. For 2024, the S&P 500 has delivered a remarkably strong return. As of mid-2024, the S&P 500 is up over 14% year-to-date. That's a fantastic return for a single year, let alone just 6 months. Contender 2. Individual stocks, the roller coaster. Now let's look at individual stocks. This is where it gets interesting. If you had picked the right stock, say NVIDIA, which skyrocketed due to AI mania, you could have seen returns of over 150% this year, an incredible win. But here's the catch. For every NVIDIA, there was a Tesla, which has struggled and is down for the year, or a Pfizer, which is also in negative territory. Picking the single winner in a crowded market is incredibly difficult, even for professionals. The critical comparison. Consistency versus lottery tickets. See the disparity? The index fund provided a solid, dependable return that beat the vast majority of professional fund managers. Meanwhile, the chance of you, me, or anyone consistently picking the next NVIDIA year after year is statistically tiny. The data from S&P Global consistently shows that over 80% of active fund managers fail to beat the S&P 500 over a 10-year period. Practical advice. Your personal game plan. So what does this mean for your money? Here's a simple step-by-step plan based on your investor profile. Step 1. For 95% of investors, start with the foundation. Your core portfolio, the 80–90% of your investment money, should be in low-cost, broad-market index funds. This guarantees you'll capture the market's overall growth without the stress or risk of picking losers. It's the most reliable path to long-term wealth. Step 2. For the 5%, the fun money approach. If you enjoy researching companies and following the market, you can allocate a small portion, no more than 5 to 10% of your portfolio, to picking individual stocks. Think of this as fun money. It satisfies the urge to pick winners without jeopardizing your financial future. Step 3. Automate and ignore the noise. The real secret is consistency. Set up automatic monthly contributions to your chosen index fund. This strategy, called dollar-cost averaging, removes emotion from investing and builds wealth silently in the background while you live your life. So, who won in 2024? While the headlines were dominated by a few superstar stocks, the real accessible winner for millions of investors was the humble index fund. It provided fantastic returns with minimal risk and zero stress. The lesson is clear. Stop trying to find the needle. Just buy the entire haystack. So, which side are you on? Are you a disciplined index fund investor, or do you enjoy the thrill of picking stocks? Let's have a friendly debate in the comments below. I read every single one. If this data-driven breakdown helped you, please support the channel by hitting the like button and subscribing to Asset Bloom for more no-nonsense financial insights. For our next video, we're breaking down the 3-fund portfolio, the simplest investing strategy that beats most professionals. Hit that notification bell so you don't miss it. Thanks for watching. This is Asset Bloom, helping you build wealth with wisdom, not hype.